The current administration has a five-sided effort to reshape the US and global economy, and it includes tariffs, DOGE, tax cuts, deregulation, and immigration. Tariffs. What is the goal of their tariffs? Well, it's to bring manufacturing back to America, force other nations to reduce their tariffs, and raise money for the US. Here's the problem.
Well, I mean, this makes no sense to me economically and no sense politically. So what are we saying? We're going to bring 100,000 manufacturing jobs back to the United States and tank the stock market by $20 trillion in the meantime? Do you think the people in Florida living off, the accumulated wealth that they've done in the last 10 years are going to be all excited about, some plant that Trump saves in Erie, Pennsylvania for 300 jobs or 500 jobs? By the way, producing something that they could have brought cheaper without the tariffs beforehand. I mean, it just doesn't make sense. I hear it, but then I think of the politics of it, and I think of the economics of it, and it just doesn't wash. Yeah, we do. There are unfair trade practices. We want to normalize some of these, but this grand vision, the cost parity is just nowhere near there. And the political parity does not speak anywhere in favor of the Republicans or for the American public. Don't forget, almost half the American public owns stock, if not directly, indirectly, through their 401ks, through their IRAs, through their pension funds. You have 180 million, 150 million people there. So, we're going to bring some manufacturing back to the U.S. How many jobs is that? Less than 0.1%. So they're going to get a little higher pay than they would otherwise. Where's the politics there, Scott? I don't see it. Maybe someone can tell me.
Okay, well, what about force other nations to reduce their tariffs? So far, we haven't really seen that effect. Rather, we've seen that other nations are ratcheting up. Sounds like the EU is preparing right now to ratchet up tariffs. Okay, well, that still leaves raise money for the US. So actually, decreased growth is expected to occur due to these tariffs. A decrease between 0.5 and 0.7% on GDP is expected to decrease tax revenue, notwithstanding the fact that the IRS was already predicting a 10% decrease in tax revenue before the tariffs even went on. So the conclusion of the U.S. investing community on tariffs, the first of the five aspects of the administration's plan, the conclusion is harm done with no objective achieved. That brings us to DOGE. So the goal of DOGE is to cut $1 trillion off of federal spending to reduce the U.S. deficit. But are we really going to sufficiently cut federal spending, and is it really going to go straight into the Treasury to reduce the deficit? Let's see what a real expert has to say about that.
I do have DOGE doubts. Now, this is an active discussion within the walls of PIMCO, so this is my personal view. Sure. But if you actually look at, and this is, again, mind-numbing process, but actually quite important, anything that is the Congress has already appropriated, spending that they've already appropriated, that gets then kind of cut or pared back by DOGE, that does not go to the Treasury General account. That does not go to pay off the deficit. That by law goes with basically a checking account within that agency and has to sit there for 5 years. This, I don't think necessarily the market understands. That means that, again, these make good sort of sexy headlines, if you will. But in terms of actual deficit reduction, we definitely haven't seen that yet, and you have to get that enacted by Congress and codified into law.
So real economists know that we would have to increase taxes or reduce Social Security, Medicare, and Medicaid to make the change that we need in the deficit, period. So the conclusion of the U.S. investing community on DOGE, harm done with no objective achieved. That takes us to tax cuts. What is the goal? Well, let's actually hear straight from the administration itself on what the goal is. Here is Treasury Secretary Bessent.
Does tax cuts get made up with tariffs, or does tax cuts get made up with cutting government spending?
Well, tax cuts and deregulation will change the growth trajectory.
Grow GDP.
Will grow GDP. If trend line has been 1.8, if you can move the growth to 3 or above,
right,
then you really change the trajectory. And if you can keep expenses flat or do the unthinkable and cut expenses, then you can really...
So this is important. So sorry, government revenue as a percent of GDP can go lower if you have lower expenses and a faster growing economy.
Yes.
I think that's like really important for folks to understand that relationship. And so in isolation, tax cuts might reduce revenue. But when done with reduced government spending and deregulation and a reordered international trade model, you theoretically will accelerate economic growth in this country, increase government revenue overall, even with a lower tax rate. That's kind of the theory.
So the goal is to reduce taxes to boost growth. And with that added growth, we'll also generate more revenue to reduce the US deficit. Is it really going to work that way, though? Well, let's hear from an expert who actually knows.
The bill that they're trying to pass, by Memorial Day, whenever it passes, I don't care, they're extending the status quo. So there are no tax cuts even built into the $4.6 trillion tax bill that they need to pass this year. So there are tariffs and there are not tax cuts. And when you sell tariffs as tax cuts, you create a pretty material disconnect between the consumer, who is confused now about what they should be expecting, which is why you see pullback at the big box retailers and people delaying big purchases, which is what's leading to that soft data that's so problematic right now.
Henrietta, what happened to the carrot and stick approach when it came to tariffs and corporate tax rates? I thought if you produced in the United States, potentially you could get a 15% corporate tax rate. Where did that conversation go on Capitol Hill?
That conversation is nowhere right now on Capitol Hill. Each percentage point reduction in the corporate tax rate costs $150 billion. So as I mentioned, we're already at $4.6 trillion just for the status quo. We got to fix the SALT cap, even just to raise it up to $20K for couples filing jointly. We have to extend the child tax credit. The president wants to do things like eliminate taxes on tips, which is itself $175 billion. We do not have the money for a 15% corporate tax rate. And even if you did, I'd like to relay that the Republican conference and members up there do not support additional tax cuts for the business community. They view the 2017 tax bill downfall. The one piece that was really unpopular is that the corporate rate cuts were permanent, and all the individuals in the United States are now subject to a tax increase at the end of this year because of the 2017 bill. So there's not a lot of appetite for tax cuts at the corporate level.
So, Henrietta, what kind of extras can we get? Do we get no tax on tips, no tax on Social Security? What could Trump put on this to make it more than just an extension of TCJA?
That's a great question. The no taxes on Social Security is physically not possible. They're not permitted to address Social Security in any capacity using reconciliation instructions. So that's entirely off the table. And just so we're clear, the cost of doing that would be $1.8 trillion. So if it was not physically impossible, it's definitely monetarily impossible. The no taxes on tips piece doesn't have a tremendous amount of support because there's not been enough education or discussion of how to rein that in so that you don't avoid, a CEO saying the $1 million that I made last year is actually just a tip and evading taxes. So they don't have the logistics worked out for that. And then in addition, that's not a universal tax cut for all individuals. It's only a tax cut if you get tips, which not everybody does. So it's disproportionately impactful to different states. That was a big sell in Nevada, but Nevada does not have Republican senators. So it's going to be really difficult to get that over the finish line. There's not a lot in there that can be described even charitably as stimulative.
So once again, the conclusion of the U.S. economist and investing community on tax cuts. It's not actually going to happen, but if it did happen, massive harm might be done. That brings us to deregulation. So reduce regulation on businesses so that businesses can grow and flourish. It sounds really, really nice. And actually, there has been some deregulation, but mostly only in crypto. You got to hand it to them. They have done deregulation in the crypto sector. That being said, we have a pretty similar FTC regulatory landscape as we did before for non-crypto big tech. That's not helping. And we have the continuation of ideological regulation. So the previous administration was ideologically opposed to crypto, and they increased regulation because of that. This administration is ideologically opposed to DEI and immigration, so they are increasing regulation related to that. The big story from today was that the FCC is investigating Disney and ABC for DEI initiatives. Federal government is being weaponized against businesses and increasing regulation for ideological purposes. So they're also talking about closing tax loopholes like cruise ship flagging and offshore tax havens. That's new regulation that will be bad for corporate profits. So the conclusion of the US economist and investing community on deregulation doesn't seem to be happening, but even if it does, it might not matter. Now, when it comes to immigration, economists are concerned about that also. They're concerned about tightening labor conditions. One thing that's been a bit overlooked, though, there's this Trump card, which is essentially a visa that people can buy. People who have enough money can purchase to come and move to America and receive some kind of permanent residence here in America. And some in the administration are saying that it might lead to 1 million people coming, and Trump himself is hoping that 7 million people will come. But no one seems to be talking about the fact that that could potentially be inflationary. Obviously, they're excited about the possibility for it to pay down the deficit. But imagine if we were saying that all these millions of unauthorized immigrants coming to the US caused a frozen housing market or contributed to it and contributed also to inflation. Imagine 7 million higher earning people coming to the US. Don't you think that might actually cause some inflation or increased problems in the housing market? No one even mentioned that. The conclusion of the US investing and economist community on the overall economic policy is that it's just not well researched or thought out and probably harmful.